30 days later. And so, okay, for the first 90 days, yep, I'm going to dip into my emergency fund. And then, after 90 days, then I'm going to be able to get some income protection. And maybe the benefit period is, 2 years. And so you know that, okay, for the next 2 years, I'm going to have income coming in. Maybe it's not as long, maybe it's shorter, maybe it's longer.
Welcome to 360 Money Matters, where financial planners Billy and Andrew talk all things financial planning. This podcast aims to increase your knowledge and confidence with all things money. Each week, they will cover topics such as investing, cash flow, budgeting, saving, passive income, debt management, and much more, so you can live a life on your terms without limits.
Hello and welcome back to another episode of the 360 Money Matters podcast. I'm Billy and I'm joined by my co-host,
Andrew. Bills, here we are back again, back on the podcast.
Back on the podcast for a second time today because I pressed the wrong button and cancelled the recording about 3 minutes in.
I was a little bit more subtle in my dig there. I wasn't going to bring it up to all of our viewers and our listeners, but since you did.
I've done it more times than you, so yeah, it's becoming a bit of a habit from mine.
I know, I don't know what's happening. I mean, we went through probably 150 episodes and didn't have any issues, and then Billy's all of a sudden in his senile old age doesn't know how to manage technology.
I'm trying not to touch anything here, and
you talk too much with your hands.
That's what it is. Andrew, let's get right into it. What are we talking to everybody about today?
So today we are talking about a topic that's not really that pleasant to ultimately talk about, but I still think important nonetheless. And it's really about how you navigate money during major health events and post major health events. So what do you do? How do you manage it? There's probably been a disruption to income. There's probably some additional expenses. What are some of the first things that people can consider?
Yeah, the first one right off the bat, and we talk about this and we advocate for it, and really this sits at the center of a financial plan, is having an emergency fund. Not necessarily for the sake that we're talking about here. It could apply to anything, but in this instance, this is a perfect example of what it could be used for. But having an emergency fund is basically a pile of money that's just sitting there, just in case something happens that's unexpected, unknown. It doesn't necessarily shock your financial position where it absolutely derails where you're at and you can't afford to pay your bills and bits and pieces. So what we advocate for, what we advise clients to do, is having between 3 and 6 months of expenses in an emergency fund, just sitting there, whether it's in a savings account, whether it's in an offset account. Basically, it's just sitting somewhere. It's liquid. You can access it really, really quickly. This is a perfect example. Medical expense comes in. Where am I going to get the money to pay it? That's what the emergency fund's for. It could also be a disruption to income as well too. So your income stream may be disrupted because you can't work for a period of time. What does that look like? You've got some emergency funds there to be able to tide you over. And really what it's doing is it's buying you time until you can figure out what the next steps are.
Yeah, exactly right. And it's one of those things that, I mean, if you've got the time and the ability to plan for it beforehand, then yes, absolutely, that should be a part of basically any financial plan. But if you don't have the time, so if you're in a position where something's happened, maybe emergency fund has already been expunged, maybe it's not there, it really starts to become an exercise of, okay, trying to map out, at least in the initial stages, what's an immediate need. Yes, you want to be able to plan for the future. Yes, you want to be able to map that out, and that process will come. But initially, it's just a matter of, okay, what are the immediate medical expenses? What's out of pocket? What's covered by Medicare? What's covered by private health insurance? What can I do to be able to manage these immediate costs?
Yeah.
And obviously, the first point in call that you're dipping your hand into is that emergency fund, because that's ultimately what it's there for. And I think, sometimes psychologically it can be a bit difficult because you don't want to expunge that emergency fund, but at the same time, its purpose is for exactly that reason.
Yeah, exactly right. The next one that I tend to think about is insurance. So most people should have insurance. If you don't know if you've got any or not, obviously the most probably obvious place to look at and start is looking at your superannuation, because most of the time your superannuation has default insurance that's built into that. But really getting an understanding of what you've got, what coverage you've got, what you can claim on, what are the parameters that sit around that. So you do know, hey, it might be a period of time before I can get my hands on some money, but I know that it's coming in. So if you've answered that question and say, hey, I know that it's coming in and I know how much it is and when it's coming in, at least that way that can help you with your planning. But understanding what your insurance entitlements are and maximizing those insurances, getting an understanding of the claims process so you're not avoiding delays, understanding whether you're eligible to make a claim or not so you're not wasting your time and then the claim getting rejected. A really good place to start is to reach out to your financial advisor and they'll be able to help you with that process as well too. But can't understate, we obviously recommend insurance all the time for this particular reason. If you've got the coverage, that's what it's there for.
Yeah, exactly. And tied up within all of that, I mean, obviously superannuation is maybe, either the first or the second place that you might look if something's happened at work. There's obviously workers' compensation.
Yep.
Some of the things that some people tend to sometimes forget about is if there's a policy that your employer holds on your behalf. So some employers offer benefits like income protection insurance and things like that. If there is anything like that, making sure that you're, claiming on it and maximizing how much money that you can ultimately get that can come in. But yeah, really doing a deep dive and understanding where is my insurance, when is it going to kick in, so that you can map out, okay, it's, maybe my income protection has a, 60-day waiting period and maybe, the insurer starts paying out 30 days later. And so, okay, for the first 90 days, yep, I'm going to dip into my emergency fund. And then, after 90 days, then I'm going to be able to get some income protection. And maybe a benefit period is, 2 years. And so you know that, okay, for the next 2 years, I'm going to have income coming in. Maybe it's not as long, maybe it's shorter, maybe it's longer. Like, give yourself a really solid understanding of what income is going to be coming in and how much am I actually going to be getting from an insurance coverage perspective as well.
Yep.
But yeah, and then income changes,
Yeah, this one's interesting. I mean, managing income changes. So what are some of the strategies that we can think about when we're talking about replacing lost income? Lost wages during treatment or recovery? What are some of the things that we tend to think about? For me, it's looking at your position, getting a really clear understanding of what that is. If you're in a relationship and the other person, can potentially increase their hours to try and help cover it, that's definitely something from that perspective to take into consideration. It can be quite complex, but having a look at what government support services there are too. With those ones, that probably takes a little bit longer because there's eligibility periods and things like that. But I think getting an understanding of where you're at, firstly, knowing what your basically, your household budget cost, what it costs to turn the lights on, getting an understanding of what that is, and then basically saying, okay, this is, say, the gap or this is the shortfall. And then what are some of the things that we can do? Obviously, I've just jumped straight to increasing income through your partner or some support services from the government. But really, I think it's an exercise in expense management. Yeah. So then going back to your budget and going, okay, what have we got here? What's absolutely necessary? So we'll think about discretionary and non-discretionary items and basically just take the red pen to it and just start slashing those expenses.
Yeah, and I think that's where most people can have the biggest amount of influence, and that's where the majority of it tends to happen. Because from an income side of things, particularly, I mean, even if you consider that a partner is off work because they're sick or injured, then generally it means that the other person probably needs to reduce hours because they need to care, they need to be there for them. And so what you can do from an income side of things is usually quite limited. But from an expense management side of things, that's where you can have the greatest level of impact. So there's obviously, looking at your, discretionary expenses, looking at your expenses that are absolutely essential. There's even, some consideration to, do you, contact lenders like your bank and say, hey, I want to put a pause on mortgage repayments and get some sort of relief from there in order to be able to, give yourself some runway. Recognizing and knowing, though, that it will have some sort of an impact from the future borrowing capacity side of things. Now, yes, it can be explained. Yes, there are ways around it. Yes, there are things that you can do. But at least going into it and knowing that, okay, I know that this is very likely going to have some sort of impact, rather than expecting that, I had a medical expense or I had a medical event, I couldn't do anything about it, and, not being able to borrow if you're then looking to make another purchase or do a refinance or do something in 6 or 12 months time, but go into it with the expectation that, hey, this is, probably going to impact borrowing capacity or, credit history and things like that in the future. But those are the measures that you tend to need to go down when you're at this point in time as well.
Yeah. And when we think about sort of a household expense, and we'll take a really generalistic approach to this, the mortgage is usually the biggest ticket item in a household budget, right? So that's a fairly natural one. Most lenders will be fairly flexible. They've got hardship lines. They're in the business of helping people in that regard, and buying them the time that they need in order to recover and figure out what they're looking at. So even though it may not be stomachable or digestible because you don't want to do it, you don't want to fall behind, I think practically it can end up like that. But just going back to another point that you were making, Andrew, if this stuff happens and you do pause your mortgage and whatever it may be, not only just around the debt piece and borrowing again and what have you, but depending on how long recovery takes and then what that looks like, needing to revisit your financial plan and basically going, okay, does this need to change because circumstances are now significantly different than what they were? So maybe, my lifetime earning capability was this, and now it's that, and it's reduced. I have to adjust my expectations and go back and press the reset button. So, and not that there's, anything wrong with that, because that's just life, and, you need to pivot and bits and pieces and basically play the cards that you're dealt. But yeah, I think as an extension of that, it's not just, hey, looking at the mortgage short term. If it turns into something more long term, it's like, okay, how does that then impact our longer term plans? And do we need to adjust? Do we need to pivot? Really simple one is picking up the phone, organizing a meeting with your financial advisor, and revisiting that to see what impact that will have down the track, if it's something longer term in nature.
Yeah, exactly right. And if it is, even some of the things that unfortunately people need to consider, and again, it's not one of those things that you ultimately want to do, or, certainly not as a first step, but starting to look at, do you start liquidating some form of assets? Do you stop your contributions in, contributions towards your investments? Do you put a pause on things and then even potentially start selling out of some assets? What are the assets that you sell? What are the tax consequences going to be of that? What's going to provide me immediate relief? Is my relief immediate? So what I'm talking about is potentially, you consider, maybe someone that's got a bit more or is a bit more further along from their, in their wealth creation journey. Maybe there's an investment property, maybe there's an owner-occupied property, maybe there's some investments that sit in, either some shares or equities or managed funds outside super. And you're starting to consider, okay, is what's happened going to be long-term in nature from a recovery side of things? Do we need to consider selling maybe the investment property because that's going to provide cash flow relief, going to provide a big lump sum, and that'll buy us the time to be able to make a decision? Do we expect that this is going to be shorter term in nature, so we don't want to impact that, we don't want to trigger a large capital gain, we'll sell a parcel of shares because we've got some flexibility there? But engaging with your financial advisor, with your professionals to say, okay, what are the tax consequences of selling this? Can I sell a portion of this asset and, kick the can down the road for the rest? Like, what's the best way to structure liquidating assets?
Yeah. Yep. If it comes to that.
If it comes to that point in time, so that at least you're prepared for it.
Yeah. Yep. No, well said. Probably on a practical side as well too, from an estate planning perspective, and not to the extent where somebody's passed away, and you will, but having things like your power of attorneys in place. And just from a really practical sense, because if for whatever reason, you're incapacitated for a period of time, you want somebody to still be able to access your accounts if needed. So making sure that you've got that set up. So if there's expenses coming in that need to be met, then there's not that. It's going to be a difficult enough time as it is anyway, but you don't want to create that additional friction to go, okay, I know that there's money there to be able to pay for this expense, but I can't get access to it because, that person was never organised, didn't get their powers of attorney in place, and I can't access that money on their behalf to pay for these medical expenses. So I think that's just a really simple and practical one that we sort of talk about from a ticking a box housekeeping exercise, just getting it done. Real simple one because it can cause issues. And I guess that's a good pivot into probably the next thing is support networks, Andrew. If they've got money there and you can't access it, maybe somebody else steps in. to cover it in the short term. Tell us about the support networks and maybe some financial delegation.
Yeah, I mean, it's one of those things that I think if you're in that position and you've got, family support around you, that's fantastic. So tapping into that support network, whether it's financial, so, maybe it's something financial in the sense of, gifting an element of money or borrowing some money or doing something in that regard. Maybe it's, taking care of kids. Maybe it's, doing something around the house. Maybe it's, whatever it is, but tapping into those support networks. I think that at what we're, have been talking about is maybe someone that's got a bit of a financial plan that has, gotten some advice and has some levers to pull. If you're at a point in time where, maybe that hasn't happened and maybe there isn't really that support network around, looking at things like, charities. Are there any charities that I can, contact to be able to offer you some financial support over what's a difficult time? Are there, any GoFundMe pages that can potentially offer some support? So looking at, what options are around, what can I do, and what can I tap into, particularly if something is in that real dire straits. Yeah.
And let's face it, I mean, look, there's a lot of support services out there. I think ultimately the message with all of this is that, yes, there's certain things that you can do, and there's certain levers that you can pull. All of those, in my mind at least anyway, seem to be a secondary choice and an option when you compare that to, say, hey, being prepared and having a plan or a strategy to be able to compensate for that stuff. And it may not necessarily be, hey, I want to be in a position that I'm planning that in the event that I have this, then I've got that covered. It could just be, generally speaking, I've got, and we can run through the list, but, I've got an emergency fund in place. I've got insurances. I've got a tracking tool, or I've got a budget that I'm working with. So I know what my discretionary versus my non-discretionary items are. So if we do need to chop stuff out, it's fairly easily identifiable from that perspective. I've got my estate planning in place in case somebody needs to step in and access my bank accounts. Support network, yep, that one there. I've got family that I can talk to, lean on, what have you. That's probably a little bit different and sits outside of this. And, I've got a strategy in place. I've got an advisor. So if it is longer term in nature, they can work with me to then be able to help me figure out what this looks like and what impact that's going to have on the goals and aspirations that I was working towards.
Yeah, exactly. And that kind of brings you to the point of, okay, sort of, post all of this and maybe you've, gotten through it and you're on the other side, is starting to reassess, okay, what are my long-term goals?
Yeah.
Like, firstly, and usually where most people start is, okay, I've been impacted financially. How do I get back on track? That's kind of the default starting position. But is that plan that you had before still relevant? And what I mean by that is when people go through a life event, your perspective generally changes.
Yeah. Yep.
So is it now, super important to leave a legacy and leave money behind and, do something for your kids? Or have your goals now shifted and you say, you know what, I want to put, $15,000, $20,000 aside so that I can take my kids on a holiday and I can do something of that sort. What has changed in my own perspective? The circumstances have certainly changed, and yes, you pivot and adjust for that, but has the goal actually adjusted, and do I need to make any difference, or do I need to make any changes there? If it hasn't, okay, I've maybe depleted some assets, or maybe I haven't contributed to super for a year. How do I then build that back up to make up for that lost time to still make sure that I achieve the goal? But the first starting point is the goal still relevant? Is it still the same? Has that changed? And then how do I make sure that I still get to that at the end?
I'm channeling Simon Sinek, and it's all about your why.
Yeah,
and you're absolutely right. What we see is when these things do happen, it really forces you to take stock and go, okay, what am I doing? Where am I at? What should I be doing? Why am I doing this? Why am I not doing that? And yeah, it does. It changes things in that perspective. And generally, I don't know, it tends to change people's minds towards those things that don't necessarily cost a lot of money.
Yeah.
I'm going to spend more time with my family. I'm going to spend more time outside. I'm not going to work as hard, bits and pieces, whatever it may be. But yeah, it's just interesting how that goes. But Andrew, look, thank you for today. our listeners and our viewers. Hopefully we brought a whole heap of value and sparked some ideas if this is something that you've thought about or know somebody that's gone through it. If you like or if you want any more information, details are in the show notes. Get in contact with Andrew and I. Andrew, thanks for today.
Thanks, Bills, and look forward to catching you on the next one.
Thanks for listening today. If you have any questions on what we talked about or would like to have a chat about your money journey, visit us at 360fs.com.au.
The information in this podcast is general in nature and does not take into account your personal objectives, financial situation, or needs. It is not financial, legal, or tax advice and should not be relied upon as such. You should consider whether the information is appropriate to your circumstances and seek professional advice before acting on any of the information provided. Past performance is not a reliable indicator of future performance. This information is provided by Billy Amaritis and Andrew Nicolaou of 360 Financial Strategists Proprietary Limited, authorised representatives and credit representatives of Acumen Financial Planning Proprietary Limited.